Audio recording for this meeting has begun.
Good afternoon, everyone, and thank you for joining us for today's webinar, VA Housing Resources for Heroes, an in-depth overview of the VA Home Loan Guaranty benefit. My name is Shantaria Charleston, and I will be the moderator and host for today's call. If you have not already done so, please ensure that you have access to both the audio and video portion of the webinar. To access the PowerPoint for today's call, please follow the link on your meeting confirmation email. All participants are in listen-only mode, which means your line is muted. However, we are very interested in your questions and feedback. So to submit a question during today's presentation, please use the Q&A box that will appear on the lower right-hand side of your screen. Again, today's webinar is being recorded. Both the recording and presentation will be available on HAC's website, www.ruralhome.org, shortly following the webinar. And so I am looking on the screen and I see lots of familiar names. And so some of you might be aware of what the Housing Assistance Council does, but for those of you that are new to our webinars, just a brief overview of the Housing Assistance Council. HAC is a national nonprofit organization based in Washington, D.C. that assists local organizations with building affordable homes in rural America. With the mission to improve housing conditions for the rural poor, HAC places special emphasis on striving to serve the poorest of the poor in the most rural places. HAC emphasizes local solutions, empowerment of the poor, reduced dependence, and self-help strategies. HAC assists with the development of both single-family and multifamily homes and promotes homeownership for working low-income rural families through a self-help sweat equity construction method. So if you're interested in learning more about HAC services or products, HAC has an office near you. If you have questions or require assistance, please contact your nearest HAC regional office. The address and contact information for each of those offices are currently being displayed on your screens. Also, please mark your calendar and join us for the following place-based trainings. We're having a Section 502 packaging certification course that's taking place in Burlington, Vermont over June 28th through 30, as well as our semi-annual HAC 2016 Rural Housing Conference that's taking place in Washington, D.C. over November 29th through December 2nd. So again, I'd like to thank you for joining us for today's webinar, VA Housing Resources for Heroes, an in-depth overview of the VA Home Loan Guaranty benefit. So at this point, I would like to welcome and introduce our speakers for today, the VA Home Loan subject matter experts. First, we are joined by Terry Sear, who has over 36 years with the Department of Veterans Affairs. She has worked in the VA Home Loan Guaranty program for more than 29 years. She is currently VA's Central Office Servicer Liaison and focuses on ensuring loan servicers have the knowledge and ability to effectively assist veteran borrowers. Our second subject matter expert today on the call is Mark Connors. Mark is an Air Force veteran who, prior to his tenure with the VA, worked with the Small Business Administration, making disaster home and business loans in the wake of Tropical Storm Allison in Houston, Texas, and New York following the 9/11 terrorist attacks. In 2010, Mark joined the Loan Policy Staff VA Loan Guarantee Service Central Office in Washington, D.C., and currently serves as the Lender Liaison. Our last subject matter expert joining us today is Gregory Nelms. Greg is the Chief of Loan Policy, where he is responsible for formulating loan origination and eligibility requirements, as well as policies and procedures necessary to administer the VA Home Loan Program, which includes making direct loans and approval of private lenders for VA's automatic authority. Prior to his current position, Greg was part of the VA's Quality Assurance Team and a supervisor at the Atlanta Regional Loan Center. So at this point, I would like to turn the webinar over to Mark. Mark, are you there?
I most certainly am, Shantaria, and I tell you, I'm delighted to be here, and thank you all for joining. And on behalf of our director, Mike Frew, we're delighted that you are taking the time out of your day to learn more about the VA Home Loan Program. And before I get into the body of our presentation, I just wanted to go over a little bit of the history. For those of you who don't know, the VA Home Loan Program started in 1944 with the Servicemen's Readjustment Act of 1944, commonly referred to as the GI Bill. And one thing that I think is very important to keep in mind as we go through the presentation is that there is a fundamental difference between the VA Home Loan Program and any other mortgage programs out there. And that fundamental difference is that the VA Home Loan Program is a benefit. It is a valuable benefit that is earned by our nation's servicemen and women, and sometimes with the ultimate sacrifice. So let's get into the mission, vision, and strategic plan. I don't want to read verbatim the mission because you can see that, but there are 3 words that summarize our mission, and this is not going to be the only time that you see it during the presentation because it's important. And that is we help veterans, service members, and survivors obtain, retain, and adapt their homes. And in order to do that, and these are not just words, it's a philosophy that we live by. We want to be the leading voice for veterans on all housing matters. And to do that, you can see that we attract and retain a workforce with the skills, knowledge, and commitment necessary to serve veterans. But I can tell you that the folks that we have on our staff, and I think VA-wide, it's somewhere perhaps a little north of 700 people, are the most dedicated, competent, knowledgeable folks that I have dealt with. And I think almost to a person, there's just a sense of service. A lot of us are veterans, and we are giving back, or everybody is giving back to the veterans that have served this country. And again, keeping in mind that fundamental difference is that this is a valuable benefit that has been earned by the veterans is important. And when we talk about innovation, holy cow, we are doing all we can every day. Our director pushes us to strive to make the changes necessary with the overall goal of keeping the veteran first and serving the veteran, delivering a quality experience from the time that they start the very beginning of the home loan process all the way through to closing. So let's just take a moment to talk about what a VA loan is. For those of you that don't know, VA does not actually loan or fund the loans. Rather, VA guarantees a portion of the loan. And while VA has underwriting guidelines and standards, the congressional intent of the program is to get as many veterans into homes as possible. And I ought to point out that universally we refer to active duty members or service members, veterans, those folks that are no longer on active duty, survivors, all of those we unilaterally refer to as veterans. And so because the congressional intent of the program is to get as many veterans into homes as possible, we give lenders a great deal of authority to approve and find ways to approve loans for the veterans. And that's not at all to say that it's the right time for every veteran to have a home. By law, the veterans must have satisfactory credit and sufficient income to handle their liabilities. But we encourage lenders to find ways to approve those veterans that ought to be approved. And you can see there in the bullets the obtain, retain, and adapt. So I hope that by the end of the presentation, those are three descriptors that you remember, so that if somebody asks you, what is the VA Home Loan Program? What is their mission? You're able to immediately say, well, VA's mission is to help veterans obtain, retain, and adapt their homes. And I briefly touched on the next subject, who is it for? Again, veterans, service members, survivors, and members of the National Guard and reserves. In addition to the home loan, there is also, VA also has grants, and they're referred to as specially adapted grants. Those are for the severely injured, for example, to help veterans widen hallways to accommodate a wheelchair, or adapt a bathroom that allows disabled veterans to take care of their daily activities. And I think now we will, well, one other thing that I think is important to mention, we're not only going to give you the overview today, but we're going to leave you with some resources that will allow you to find out more about the home loan program and how you can get involved and help deliver the benefit to our veterans. And I believe Greg will take over now and discuss eligibility requirements.
Thank you, Mark. Eligibility for the VA program is one of the cornerstones of the program. In order for someone to qualify for the program, during their active duty service, they need to meet at least 90 days while they're active. And what's separated, we generally have a 2-year rule for length of service. There are some exceptions to that, and the reason for discharge can come into play there. But while on active duty, 90 days, and after that, 24 continuous months. If they are called to active duty sooner, that's generally under what we call Title 10 orders, and that would qualify veterans as well, qualify the service member as well. Some years ago, it was approved that National Guard and Reserve members also would be eligible, and their requirements are 6 years and a discharge that is honorable. We have several ways we verify that, and that's with point statements or statements of service from their National Guard units. We also have veterans that are sometimes in receipt of service-connected compensation, and they are eligible as well. There are a few exceptions where they are not, but in most cases they are eligible for the program. And in the way that a veteran, someone gets a certificate of eligibility, they can apply through our lender, which is probably our most efficient way. We process those on an average of about 2 to 3 days. And the other way a veteran can get that is through the e-benefits portal at ebenefits.va.gov. But in general terms, we process about 25 to 30,000 certificates of eligibility per month. And it is we've had some record year after record year. And so we're very proud of the amount of eligibility determinations that we make. And right now, those, just to let you know, that process we are processing those throughout the country at every one of our regional loan centers. And back to you, Mark.
Thank you very much, Greg. So now I would like to talk about the available loan types or products that VA has available. The first is the purchase loan, and everybody knows what that is. And currently, we'll talk about some additional stats in a moment, but we're running a little north of, when you take a look at all of our loan products, a little north of 50% of those are purchase loans. We also have the interest rate reduction refinance loan, affectionately referred to as the EARL loan, and that is a rate term reduction loan. And the only criteria to have an EARL loan is that your current loan that you're going to be refinancing must be a VA loan. So then one might ask, well, what do folks do if they don't have a VA loan and they may not have known about the VA loan at the time they purchased the home, or they might not have been eligible for a VA loan at the time they purchased the loan? Well, VA offers what we refer to as the VA cash-out refinance loan. So this serves a couple purposes. One, it is the loan that veterans can use to refinance a non-VA product into a VA product, and there's not a requirement that the veteran take cash out when they do a cash-out refinance loan. Or if the veteran has equity in the home, they're able to actually take cash out to pay off whatever debt they may have, or do modifications to the home, whatever is acceptable to the lender together with the veteran. And the VA also makes direct loans. And we have the Native American direct loan. We refer to that as the natal loan. And the reason that VA has the natal loan is that lenders are reluctant to make loans on trust land. So VA has a Native American direct loan that allows veterans living on trust land to purchase and own homes. So now one of my favorite points of discussion are the statistics. And one of the things that we like to do is, because we have a mission to provide the benefit to the veterans and help make that home buying process as smooth and transparent as possible, it's important for us to have our structure set up in such a way that we are at least achieving what the rest of the industry is. And the most recent data that we have from Ellie Mae's Origination Insight report is the April data, and that's 48 days to close VA loans. And that is an average, and that is right in the middle with the rest of the programs. One of the items that is particularly important to purchasers or veterans that are refinancing is the interest rate. And the interest rate on the VA loans has been running south of other products for quite some time. So, there was a period of time years ago that the VA rate was set nationally. So whether you went into Bank ABC or Bank XYZ, if you were going to use a VA loan, you would have the same interest rate. But we view the now competitive nature of the interest rate as a positive negotiating tool for veterans, and particularly with veterans that have worked hard to build up and maintain a strong credit rating. Now, since 1944, the growth recently has been phenomenal. We made our 20 millionth loan in October 2012. And if you recall earlier, I mentioned that the program is available to active duty service members, veterans, those no longer serving, and survivors. Our 20 millionth loan happened to be a survivor of a spouse who passed away in Southwest Asia. And talk about growth. Last month, we hit our 22nd millionth loan. Last year, there were nearly 1,500 individual lenders that made at least one loan. And as Greg alluded to, last fiscal year, was an all-time record for us. We were at little over 631,000 loans. And our fiscal year starts in October, and I took a look at the data as of close of business yesterday, and we were already at 431,237 loans. So, and now, of course, we're getting into the peak purchasing months, and so we're on track to, who knows, we may even surpass last year's number and have another record year. And I believe now Greg will take over and discuss some of the numerous benefits that we have.
Thank you. The statistics do show that it is a fantastic benefit, and some of the features are that the benefit does not expire. It's a lifetime benefit, and not only can it be used multiple times, but it is possible for veterans to have more than one VA loan at the same time. In general, no down payment is required. Some veterans choose to make down payments as it helps them with other costs in the loan, but it is not required. No mortgage insurance, of course, no monthly premiums for that. As Mark said, the rates are negotiable, and it gives the veteran a great benefit in that it is a competitive environment. They can find the best rate, but they also get to shop for their service as well. Another cornerstone of the program is our minimum property requirements. This is to help ensure that this veteran is getting a safe, sound, and sanitary home for them and their family. And a couple of other benefits that aren't listed here. VA does have limitations on closing costs that lenders can charge veterans. In talking about how well the rates have performed, VA loans are assumable. And one day, if rates rise, this may be a feature that a veteran can take advantage of so that they may sell their home easier. Our loans have no prepayment penalty. They also allow for energy-efficient financing features. And another great part of the program is that VA has an escape clause that goes along with sales contracts. And should the value not meet or exceed the sales price, the veteran is protected and can get out of that contract if they choose without any monetary harm. So quite a few benefits to the program to our veterans. And Mark, do you want to discuss?
Okay, and now,
okay.
Thank you very much, Greg. Now you see a chart of our regional loan centers. We have 8 regional loan centers, and actually I guess you could consider Honolulu the 9th regional loan center, although the footprint is a little smaller. So in each of the RLCs, or regional loan centers, there are 3 main sections. One is referred to as the construction and valuation. The other is referred to as loan production. And then we have loan administration, which Terry will be talking about as we move along. And of course, we have the headquarters in Washington, D.C. And so when you include all of those folks at the regional loan centers together with the folks in our central office in D.C., we have the population of just around 700 folks, maybe a little north of 700 folks. And as promised, not only were we going to give you an overview of the program, we were also going to provide you some additional information so that any questions that you may have that are not answered today, you know how to go about getting that information. So on this slide, you see the individual regional loan centers along with their contact information, the email address, and the phone numbers. And if you have a question that pertains to either the valuation side of the house or the origination side of the house. When you contact the Regional Loan Center, you would ask to speak with, and you can see this at the bottom of the slide, the lender maintenance point of contact. That is the individual that each RLC has appointed to assist lenders through the process of not only becoming one of our partners, industry partners, helping us deliver the benefit, but we also have the Lender's Handbook. That is VA Pamphlet 26-7. And specifically, for those of you that are interested in joining the program and becoming one of our industry partners, Chapter 1, or if you know others that do, Chapter 1 of VA Pamphlet 26-7 has all of the detailed information about how that process is worked. But it is important to note that it is all done geographically through the regional loan centers. And that concludes Greg's and my portion, and we will now turn it over to Terry.
Great. Thank you, Mark. And thank you for having me. My portion is foreclosure avoidance and available assistance that we can provide at the VA for veterans. So who can help? If somebody is having trouble or anticipates having trouble making mortgage payments, who should they contact? It's always best that the veteran contacts their mortgage servicer first. They are the first, we consider them the first base to finding a solution to the problem. VA technicians, and we have a general number that you can contact because in the servicing world, we are national. So like Mark talked about regional loan centers, we do have a section, loan administration people that are in each of those loan centers, but we service our loans on a national basis. So we may have a technician in the Phoenix office, but they may be able to speak to a borrower who is on the East Coast. So again, we have a general number that you can call if you don't know who that technician is that you should speak with. And then county veteran service officers. There are organizations that I'm sure you're potentially aware of in your areas, nonprofit organizations that can provide you with guidance or other programs that may be available to veterans that are having trouble making mortgage payments. If they're already in default, then you want to call as soon as possible to make sure that they're getting what they need. But if they anticipate that they're going to have problems, again, the mortgage company has the authority to do what is right for that borrower, but the VA is here to assist when that connection doesn't work. We have veterans that maybe want to hear it from the VA, so we can be that middle person when it's absolutely necessary. The programs that are available to pretty much any mortgage program that's out there is also available if you have an existing VA mortgage. The first one is always a payment plan. You know, somebody's down 2 payments and they just had a hard time. We want to get them back on track. So we can put them in a payment plan, makes their regular payments, adds an additional amount to that monthly payment to get them current in a short period of time. That is when you find a borrower that is only a few months behind. Repayment plans shouldn't be something that a borrower has to do for 12 months or 18 months. That can become very difficult and, again, put a borrower in a worse situation. But short-term, short delinquencies, repayment plans are typically the best option. The other one is a special forbearance. So the servicer agrees that they will give that borrower 60 days or 30 days to get a lump sum. And the best example is tax season. We all know tax season, borrowers tend to file their returns as quickly as possible to get that money. If they're getting substantial amount of money, you can utilize that, show proof, and advise the servicer that the borrower is willing to make those additional payments as soon as that refund is received. So that's one example. It could be any type of a lump sum. It could be a back payment of a VA benefit that they're getting, Social Security, retirement, or anything to that effect. So special forbearance is a short term of then finding a solution to bring it current. The most common that's been happening lately is a modification. So a loan modification is where we try to incorporate the delinquency into a new loan. We modify that original terms of the loan and start the borrower on a current status. So they begin their payments all over again. And we can extend, the servicers have the authority to extend the terms from a 30-year to adding another 10 years onto that loan. They can potentially reduce the interest rate. They could forgive a portion of the debt. So there's different options that are available in a modification. But it brings that borrower back to a fresh start. So these are the three options to keep a borrower in a home. Unfortunately, there are times when that borrower just cannot stay in that home anymore. What happened? Okay, sorry, my screen just kind of went a little haywire. So the options that are available to help a borrower avoid the foreclosure. So there are some states that it takes 12 months, 18 months to complete a foreclosure. During that time frame, interest is accruing. Servicers are paying tax bills, insurance bills, legal fees. So it's costing the servicer lots of money to hold on to that loan till it actually gets to foreclosure. And that, in turn, increases the veteran's debt. So the options are to try to sell that home. And if you can sell it to pay it off, obviously that's the best option. But there's a lot of borrowers out there that purchased the homes that now the values, due to market situations, the values have really bounced around, and they can't sell that property for what is actually owed on the loan. So the short sale is one of the first options. If they can't sell it, but they do need to vacate that property, they have someplace else to go, they found a new job, and they have to leave that property, then we encourage that they deed the property back. And again, that's a voluntary agreement to deed the property to the servicer so that you don't need to go through that long foreclosure process. So these are items that should be discussed with the borrower at any time during their default, because if they feel that they just cannot retain that property, they cannot come up with a payment plan, they really don't want to be in that property, then these are the options that you want to encourage them to do so that, again, we can avoid the long foreclosure process. We can avoid the increased debt that is incurred due to the foreclosure process. So these are alternatives to avoid foreclosure. If you're working with a veteran that does not have a VA guaranteed loan, they've obtained a conventional type mortgage, VA doesn't have any legal authority to speak to their servicer to help them resolve an issue. But we can encourage them to contact their servicer. We can still provide them with guidance of potential programs that are out there. So again, most types of mortgages, you're going to have payment plans, loan modifications, special forbearances, short sales, and deed in lieu. So you can provide them with that same type of information. But again, the encouragement to contact their servicer first is always the best. You're going to get the best programs directly from them based on the type of loan that they have. But again, you can also call the VA. We have the general number that's available. You can speak to whichever VA loan technician answers the phone. If it is an actual VA loan, we will assign you a specific person to speak to throughout the delinquency of that loan. So we try to do what we call cradle-to-grave servicing, so that one person is who that veteran borrower has to contact. So we're not bouncing you around. But if it's not delinquent or it's not an actual VA guarantee, then anybody that answers that phone should be able to provide you with that guidance and that information. And we also have a VA a website which has general information for our servicers, but you can look at it and understand it. We also have a VA servicer handbook, which advises the servicer how they should service our VA loans, what programs are there, and what our rules are for them to make sure that our veteran borrowers are getting the assistance that they need. And I think that's my last slide, because it's not bouncing anymore. So I'm done.
All right, so great, very good. So at this point, we have quite a few questions that have come in. Our first question, and Terry, I don't know if it's you, Greg, or Mark, but the first question is, can a community development financial institution or other nonprofit lender become a VA lender?
I'll take that one. Go ahead.
Okay, great.
Either one. Yes, they can. You know, we do allow other organizations to enter the program, so they would need to contact the Regional Loan Center to get those requirements. And as Mark said, it is in Chapter 1 of the Lender Handbook.
Okay, great.
And to get to that, thank you, Greg, and that's right on target. And to, in case you're wondering how you find information about VA Pamphlet 26-7 or the Lender's Handbook, like we find everything else nowadays, you just go on Google and put in VA Pamphlet 26-7 or Lender's Handbook, and you'll find the various chapters.
All right, our next question is, does VA see any particular loan program utilized more in rural areas?
Oh, good question.
So I think, go ahead, Greg, sorry.
Oh, no, you know, we really don't, in our, I'm not sure I understand the question, but in our internal program, you know, we treat them all pretty much the same. We know there are unique needs for rural properties versus urban, but compared to other loan products, no, I'm not aware of any preference other than, you know, ours is just unique to our veterans. I guess they could go with FHA or a USDA as well, but the no down payment process and the benefits, generally, if they're a veteran, they're going with our program.
Ontario, this is Elysium from VA. I would just add to Greg and Mark's comments that roughly 20% of our loan volume is in what the VA determines the VA's definition of rural.
Thank you.
Thank you,
Sure
Elysium.
thing.
Another question we have that's coming from Sharon out at Community Action Network, and she's asking, is there any additional information on special adaptive housing loans?
Shontaria, this is Elysium again. Can I take that one?
Yes, absolutely.
We're planning to do another separate webinar with HAC. We think the first week of July. I think that Shontaria can help us set the dates up to discuss specially adapted housing grants. That's actually a grant program. It's not a loan that has to be repaid. It's grant funds that are put in escrow and given to, you know, allotted to a construction or a modification project that a veteran has under contract with a private sector contractor.
Great, thank you, Elysium. Our next question comes in from Joe, and he wants to know, can a veteran receive both a VA and HUD, FHA, or other similar USDA 502 loan at the same time?
This is Greg. I'm not sure about the question, but if it's like in conjunction with one another on the same property, in our program, no, we require that we're in first lien position. I would need more information to kind of, if I'm missing the point there, but I'd be glad to, if they want to clarify the question, maybe we can email them back.
Okay, perfect. We will have him follow up with you guys. Our next question comes from Mark, and he wants to know, could you please clarify what determines a surviving spouse's eligibility?
Yes, we can do that. So a surviving spouse, generally a veteran, would be receiving compensation, and his compensation is related to a service-connected issue. Upon the passing, what we call the dependency indemnity compensation passes along to the spouse, and spouses that are in receipt of that compensation are the eligible surviving spouses. There's a few intricacies in we call it DIC, and a very high percentage of them are eligible. There are a few exceptions, but for the most part, if the spouse is in receipt of that compensation that was previously her husband's, they are a qualified surviving spouse.
Okay, perfect. Thank you. A question that's come in from Janice is, how can a nonprofit form a partnership with its local VA office to assist veterans in accessing this program?
That's a good question. I would reach out to the loan production officer at the Regional Loan Center. We're always looking for additional outreach opportunities, and I think that would be a fantastic way for this organization and VA to partner and try to figure out a way to reach more. So do that on your local level.
Okay. One additional question is, what services can nonprofits provide to better house rural veterans?
Well, this is Mark, and one thing that comes to mind is to help VA in educating the veterans about the program. Currently when veterans are getting out of the service, there's a very in-depth out-briefing process that they go through where they get briefings on all of the benefits that they have earned. However, that program has not been around, particularly in its current form, for a very long time. So while the younger veterans getting out are knowledgeable about it, there's still a large gap, particularly with the veterans that have been out of the service for a while. And I'll tell you, with very, very few situations, a veteran borrower that does not utilize a VA loan is going to end up paying more for that loan over the course of the loan. So we like to, when we're talking with our industry partners, we stress that the communication with potential borrowers always starts out with, have you served, or has your spouse served? Because there are certainly some myths about the VA Home Loan Program that we're constantly trying to dispel. Greg touched on those. One, the benefit never expires. It could be used multiple times. And it's important for us to get that word out. And so that's certainly one way that you can assist our veterans.
Great, thank you. Ann Carter from USDA wants to know, what is the criteria for a veteran to have more than one VA loan?
This is Greg. I'll take that one. So our program is for veteran owner-occupants. We do understand that life happens, and sometimes veterans, they need to move for jobs or other reasons, and maybe they cannot sell, or market conditions, they want to keep that home, and that's acceptable. They can purchase another home, and what the requirement is that they have enough remaining entitlement. So depending on how much entitlement was used on the first home and how much remains, will determine, what their purchasing power will be using a VA loan with the remaining entitlement. That's something, we help with every day at the regional loan centers, and our lending partners also know how to calculate that. And it varies. We follow the conventional loan limits in probably 95% of the areas, but we do have some high-cost areas where additional entitlement is available as well. So that boils down to generally, what county do they want to go to, how much entitlement is left, and requires a couple of calculations.
So, Greg, is there a standard maximum entitlement on a VA?
Yes, maximum entitlement is 25% of the Fannie Mae Freddie Mac loan limit of $417. So total entitlement is $104,250 that they get to use. And in high cost areas it can be a bit more. I know that sounds confusing. We can probably make it a little more complicated than we need to. But just to give you an example, a veteran could purchase using their basic entitlement up to about $144,000. If they left that home, had to leave that home and purchase another primary residence, then they could use what we call bonus entitlement above that, and that would take them from they could purchase a home from $144,001 up to about $273,000. So you can see it's pretty generous, and each situation is unique and needs to be run by a lender or regional loan center, but that's in general what they could do.
Thank you. Veronica down in West Palm Beach wants to know, can the special adaptive grant be used with a regular VA purchase loan or FHA purchase loan, or even a USDA rural home loan when a home needs repair or modification to make the home habitable?
Yes, it can be.
The answer to yes. And as Elysium pointed out, there's going to be an in-depth webinar on specially adapted housing, but the short answer is absolutely yes, it can be.
Great, thank you. And I think we have a question for Terry. Joe wants to know, how can a local nonprofit help counsel rural VA financed homeowners if they are behind in payments?
So the best way is to, get that borrower to first admit that there's an issue, find out what their financial ability is, and then get in contact with their mortgage servicer. Again, if they say they've tried to reach out to their servicer, they're not getting any response, then reach out to the VA, and we get electronic data from each servicer on every VA loan. So we can look at that loan in our system to see what's going on, and then we can find a contact and try to make contact with that servicer. So always try the servicer first, but the VA is here to assist when it's absolutely necessary.
Perfect. Thank you very much. I'm trying to see, are there any additional questions that are coming in via chat? Oh, there is one that just came in, and I think it's something that, Mark, you covered earlier on, but I will ask it again. Is there a minimum service requirement for eligibility of the home loan guarantee benefit?
Greg, I'll let you go ahead and take that one, if you don't mind.
Yeah, and it really depends on the era. So to give you an example, World War II, Korean War, Vietnam War, those are mostly in the 90-day category. Gulf War, beginning in approximately August of 1990, those have a 24-month continuous service requirement, and if they're ordered to active duty, it can be as little as 90 days. So those are really the two minimums. One, we have to know when, and then we also look at a very important document, the DD-214. That's a discharge document that shows their specific dates of service and their character of service discharged. If they're still active duty, we rely on a document that can be received from their commanding officer called a statement of service. Perhaps in the chat window, maybe Maxine we can put a link in there to those specific requirements that are on our website.
Craig, I'm doing that right now. This is Elysium. I'm doing it right now.
Thank you very much.
You're welcome.
Greg, also from Corey, he's got a couple questions down in the chat box, but are you able to tell us what are the average amounts of the typical closing costs on a VA loan?
Wow. So I'm going to be very general, and it's regional, as some states have fees that are higher, but I would say that, if I'm looking at closing costs and I'm excluding taxes and insurance and interest, the prepaid items, and I'm excluding the VA funding fee, but just specific closing costs that are lender charges, title charges, and maybe a few other third-party charges, and then that would be including a lender charge like a origination fee of a 1% max that we allow, probably 3% on average. I don't have that data. I'm just going by some loans that I've reviewed in the past. But it just depends on the state, really. I know some have more requirements and title issues than others, which can make it a little bit more expensive.
Yeah, and this is Mark, and I'd like to piggyback off of what Greg is saying. And Corey, I saw the comments there, but so one on the closing costs, the law sets limits on the closing costs that veterans pay, and so our data shows that the closing costs are less. And in regards to the interest rates, a few slides back, we talked about the data out of Ellie Mae, April 2016, and we're showing VA rates are routinely lower than other rates. And as a specific example, when we look at conventional, well, first VA was 3.88 in April, conventional 5.3, and FHA 4.05. But I'll tell you, I would really, if you have data that shows that, I would definitely be interested in seeing that, because we just frankly are not seeing that, either closing costs or interest rates.
Thank you, Mark. One question that came in that's gotten rolled up there in the chat box is, are you able to, again, provide the stats of the VA loans in rural areas? I think that was a question from Julie.
This is Elysium. Yeah, I can send, through you, Shantari, I can send the last time that we ran the figures, but they're almost a year old at this point. We haven't been able to do another data run since then, but I'm glad to share those.
And we can certainly make those available as part of the materials that are going to be available on the website following the webinar.
Sure. I just want to level set, though. The figures that we have are on a summary level. Like, we don't have them broken out by, how many veterans in which state or anything like that at this point. That's something we could do in the future if people desire to have that information. It just may take a little while to get it run.
Okay, perfect. Julie has a an additional question about the adaptive housing grant. But we would, Julie, ask you to just please keep an eye peeled for information on that upcoming webinar. Elysium, if you want to answer that question now, do you want to address that, or?
Can you tell me what the question was again, Shantaria? I'm sorry, I missed that.
Yes, she wants to know, do veterans need to own their own home in order to apply for an adaptive housing grant?
It depends on which grant you're looking at. What we call the big grant for homes that are typically wheelchair accessible, modifications are made or a home is purchased to make it wheelchair accessible. The veteran does need to have ownership interest in that. However, the smaller grant that we refer to, one that is typically general adaptations to increase access or lighting, typically for veterans who have issues with their upper limbs or vision. That one does not necessarily require it. And then we have a third SAH grant called the Temporary Residence Adaptation. That is basically a portion of one or the other of those first two grants. A portion of those funds may be used on a family member's home. That law was passed to help, recently discharged service members make some basic, I got to get in, I got to get out adaptations to a family member's home so that they could receive care at home until they decided where they wanted to be long term. But yeah, again, I mean, we will definitely cover that in the SAH webinar.
Perfect. Looks like those are all the questions that we have for today. I want to quickly flash the resources there. Again, they will be a part of the materials that are available after the website. Just a really quick reminder before we wrap up, the recording and those materials will be available on HAC's website following the webinar. Please also be on the lookout for an email containing the link to your certificate of participation as well as a link to the webinar survey. We ask you to please take a moment or two to complete that survey for us. That is the way that HAC knows that we are providing the most relevant information according to your program activities and needs. In addition to thanking Terry, Mark, Greg, and Elysium, our partners at the VA, I'd also like to thank the Home Depot Foundation and J.P. Morgan Chase for their continued support of HAC's work with veterans. Also, thanks to each of you for joining us on today's webinar. Elysium, Greg, Mark, Terry, do you have any additional comments that you'd like to make before we close out today?
Well, this is Mark, and I would just like to echo your comments. Again, we truly appreciate the opportunity to talk about the program today. If you can at all find a way to help partner with us, we would greatly appreciate that, even if it is from an educational perspective. And again, going through the regional loan centers is the perfect avenue for that. But again, thank you for your time, and we appreciate your interest in helping us deliver this valuable benefit that is so well deserved by our nation's veterans.
Any additional comments from our presenters today?
No, but thank you for having us.
All right, great. Having none, I'd like to again thank everyone for their participation and wish you a very well rest of your afternoon. Thank you. Goodbye.
Thank you.
Thank you.